Hello and welcome to this video on understanding index funds and ETFs. In this video, we'll discuss the basics of these investment vehicles and why they've become so popular for investors. Whether you're a beginner or an experienced investor, you'll find this information helpful in understanding how to add these investment options to your portfolio. Before we get started, be sure to drop us a like and subscribe for all our future lessons. What are index funds and ETFs? Index funds and ETFs are investment vehicles that offer a simple, low-cost way to invest in a diversified portfolio of stocks or bonds. Index funds are mutual funds that track a specific market index, such as the S&P 500 or the Nasdaq Composite. ETFs, on the other hand, are similar to index funds but are traded like individual stocks on an exchange. How do index funds and ETFs work? Index funds and ETFs work by replicating the performance of a specific market. This means that if the collective market goes up, the value of the fund will go up. Conversely, if the collective market goes down, the value of the fund will go down as well. The primary benefit of investing in index funds and ETFs is that they offer a simple, low-cost way to invest in a diversified portfolio of stocks or bonds. Advantages of index funds and ETFs. There are several advantages to investing in index funds and ETFs, including low fees, diversification, and convenience. Because these funds are designed to track a specific market index, they often have lower fees than actively managed mutual funds. Additionally, investing in a diversified portfolio of stocks or bonds can help to minimize the impact of any single stock's performance on your portfolio. And finally, because index funds and ETFs can be bought and sold like individual stocks, they offer a convenient way to invest in the stock market without having to pick individual stocks. How to choose an index fund or ETF. When choosing an index fund or ETF, it's important to consider several factors, including the expense ratio, the underlying index, and the fund's performance. The expense ratio is the annual fee that you'll pay to invest in the fund, and it's important to choose a fund with a low expense ratio to maximize your returns. Additionally, it's important to consider the underlying index that the fund is tracking and to choose a fund that aligns with your investment goals. Finally, it's important to consider the fund's past performance, but it's also important to remember that past performance is not a guarantee of future results. If you want more of these informational videos delivered to you, be sure to subscribe and turn on the notifications. In conclusion, index funds and ETFs offer a simple, low-cost way to invest in a diversified portfolio of stocks or bonds. Whether you're a beginner or an experienced investor, adding these investment options to your portfolio can help you reach your financial goals. As always, it's important to do your own research and to consider your own financial situation before making any investment decisions. Thank you for watching and happy investing.